Anyway, I'll pick it up from here. Sorry. I guess it's recording it.
You don't have to do the same as the rest of the message.
Oh, okay.
I do.
Yeah, no, I appreciate that. And who knows, maybe your baby will turn out to be an auditor as a result. Would that make you an abusive mother? If you're trying to turn the baby into an auditor, I don't know. Okay, I'm just kidding. Okay, so, I mean, I look at this here. Do you see the lockbox mentioned here? So, I mean, where's the internal control activity, right? That talks about the lockbox. They list the lockbox as what? A good, strong internal control. And then they come over here, and when they line it up with the assertions, they don't put lockbox down as an example of a control over an assertion because it doesn't fit well with existing valuation or presentation disclosure. It would fit well with what? With completeness, right? Okay, and then this one cracks me up. The corporate secretary reviews. What? Huh? What secretary? What secretary are they talking about? Somebody in the typing pool? Are they talking about the secretary of the treasury? I don't know what secretary. This is an accounting function. This could be the accounting manager, the controller that is using a disclosure checklist and seeing that all the disclosures are properly checked. So, you know, so obviously, why do you put that slide in? Using the slide of the book, but you need some work. Okay. Okay. Key control activities, physical controls, deposit checks daily. Completeness concern. Bank reconciliation. What we say is in the bank is what should be in the bank, right? I mean, think about your own. I don't use the bank reconciliation. You probably don't, because with online banking, you can sit there and see the transactions do happen as they happen. But do you ever look at your phone and look at the transactions that happen and see if somebody mysteriously put money into your account? Have you ever done that? I wonder if somebody mysteriously put money into my account. Let me take a look, because I don't want that balance to be too high. That's not why you look at it. You look at it because what? You want to make sure it's not too low, right? Hey, if somebody did they charge me twice for that? Good. Whatever, right? Okay, so again, all of this stuff, lockbox account, dual custody, unused checks being secured, this is all completeness concerns. Okay? Internal control, just to control, observe the checks being opened. For sample of daily deposit to accounts, receivable, subsidiary ledger, trace the amount of cash that was deposited to the subsidiary ledger. Is that what they did? So that means you should get, what, a sample of these copy of the deposit tickets yourself and see that it reconciles here? Right? Okay. Picking up some of the key. Checks are not printed until voucher packets are prepared. Voucher packets are basically done in the accounting department. They're going to get the invoice that's being paid. They're going to get whatever the purchase order was that was associated with that. They're going to get the vendor invoice. They're probably going to get something from the receiving department that shows that they actually received those items, whatever they are. They're going to match all that up, and then they're going to send that to the treasurer, and it'll be the treasurer that has the right to release those funds, right? So the treasurer is the one that will ultimately have the authorization to what? To pay. They in effect have the custody on the actual cash. Okay. Come on. The CFO performs a detailed review of bank reconciliations on a monthly basis. I don't think so. Yeah. I'm the CFO of Apple. I'm being paid $5 million a year to, make sure the bank reconciliation is met. Okay. We performing the reconciliation though, auditors? Absolutely. They're not going to be performing the CFO's review, but somebody's review. Okay. We've already seen this. So the audit of cash, trace to take deposits, trace to the cash receipts journal, vouch to cutoff statements, so balance per bank, bank reconciliation, balance per bank, where you get the confirmation directly, where you get the bank cutoff statements to make sure all those things cleared the bank, deposits in transit, you add, you subtract what? Outstanding checks, right? If there are credits, you'll deal with those. Debits, you'll deal with those. They're not showing it here, but what? Bank service charges need to be subtracted, right? If you are using a lockbox, then they would have collected some cash on your behalf. You'll add those. Okay, now, cash disbursements, and remember those approved voucher packets? And the approved voucher packet is going to be what? Is going to be the invoice, purchase order, receiving report, requisition. That's prepared by accounting. Okay, it's received by the treasurer, who then will do what? Who then will sign, mail the checks, etc., right? So they have the authority to pay. But notice we separate the record keeping will happen up in accounts receivable from the actual authorization, the ability to pay. From the actual custody of the asset that was received, that was when the receiving department or the collecting department was. They would collect the computers or something with a debt, right? Right? Now, does this sound like modern accounting to you? Cash, receiving report, blah blah. Can you write that? Almost never. Everything's online banking now, isn't it? Okay. So how would you see that we have this separation of duties in a situation where you can't look at the check, the invoice, all the credit and trying to look at the credit? How would you check this, say, in an audit?
One to look at the check. You have the bank website. Yeah, the CFO has to look at it and say, oh, this is then
Yeah. Yeah, so the same individual has the ability to update accounting records, should not be the same individual has the authority to release payments, right? So I don't know if it be the CFO, but somebody at the appropriate level of the company is the one that would have the authority to release the payment, right? Okay. And what you would probably do is go to the IT officer and say, please provide me with a listing of the rights the individuals have in the system, and then check off to see that there's the appropriate separation of duty that way, right? Okay. How would you make sure that we don't disperse some money to trace in repeatedly good things? what happens? You've got a startup company. And you can get lists, guys, of companies that receive venture capital. That's published lists of companies that receive venture capital. Those lists are all over the world. So somebody's sitting in, I don't want to say that country because I don't want to offend anybody, somebody's sitting in the country of, I want to say Canada. And they're going to send a text saying, please disperse amounts to this account. They send that not a text, but an email. What control could you put call the vendor? Let's say I'm taking a trip to Pakistan. And you know I'm in Pakistan. And you're the controller. And you get an email from me saying, please disperse $10 million to this account because the deal's going to go through. That deal for us to get the Pakistani licorice has gone through. Send the 10 million, hurry. What are you going to do? Came to my email account. Well, I'm John. I take a trip to Pakistan. We get the liquid. Okay? And you get an email from my account saying, send the liquid, send the 10 million for the liquid. 10 million for the black licorice, 10 million for the red. You like black or red better? I'm a red guy. You like black or red? You're like, oh boy, red is blue today. So you want to send the 10 million, don't you? So what are you going to do? You're getting an email from me saying send 10 million. Huh? Call me. Okay. But ahead of time, there should have been control there. Yeah, hey, it's not email, it's what? It's text, it's that kind of thing. You say, well, call me, but maybe we're different time zones, that kind of thing, and I'm sending you urgent messages. Hey, you got to send me 10 million, the guy's going to walk. I'm going to get killed. You're going to find me out in the middle of the desert with liquor stuff in my mouth, right? And so I sit there and I say, hurry, right? So we should establish controls ahead of time that what? If we're talking about a $10 million transaction, 2 pieces of authorization have to happen. The email and the text, the phone call, whatever, right? You have a separate text, right? So these are the kinds of things that you have to start doing, particularly these days, right? Now, we're going to see that in a lot of the questions, they consider the 1962 version of the world, where these checks are going, et cetera, because they want to see, do you understand the process more than you understand the modern way? But I want you to be aware that these are the kinds of things that you'd be looking for in controls in a sort of more modern fashion, right? Okay? And guys, you're saying, John, those things aren't going to happen. You read about it all the time. You read about startup companies that received all this venture capital, and a lot of times if you're talking about your angel funders, the people that you've known, right? And you go, give me this money, and then you got to go back and say, well, we lost $2 million because you don't want to do that kind of thing, right? You don't want to be the auditor. Huh? Yeah, happens a lot with the technology companies because they're really good at coming up with the chip that you implant in your brain and smarter, but they have a little bit of trouble with the accounting for the chip. Okay, good. Bank reconciliation, guys. Balance per bank. Add the deposits in transit. Deduct the outstanding checks. If there are any bank service charges, whatnot, adjust for that, right? Okay. Now, Confirmation with the bank is done directly with the auditor. You mail those out under the auditor's control. I about flipped one time. There's a brand new staff that I wanted to show how to do some basic stuff. So I was helping the audit. For the association that in the Untitled Chapter, we had to audit their financial statements to do that. And so she had to send those confirmations, right? So they would announce it to the bank. And the guy says, oh, he tells me, I'll send those for you. I was about to go over and slap that dude. He knew damn well that the auditor control, these association governmental accountants, you get cute, trying to see if you could get her to make a mistake, right? And he said, well, he said he did. Call him right now and get those back from him. The auditor controls something, right? That's a direct communication between you and the bank, okay? Notice that also the bank confirmation can be used to confirm deposit balances and, well, it's supposed to be used to confirm deposit balances, but also loan balances, contingent liabilities, okay? Now, when we talk about loan balances, we talk about contingent liabilities. Are we talking about liabilities? If we talk about loan balances, we talk about contingent liabilities, we talk about liabilities. These are liabilities, contingent liabilities are liabilities, right? What assertion are we most interested in when we talk about liability? Huh? Completeness. Meanwhile, we're sending a confirmation to the classic existence step, isn't it? But we're looking at those banks that the client has a loan balance, the account balance, the deposit balance with, because those are often banks that what? We also may borrow money from, and so we're doing a completeness test by what? Even if they don't tell us that there's a liability with the bank, we still ask that question on the standard confirmation. That's a completeness test, because now we're saying, hey, is there anything out there that should be included in the financial statement, right? So even though confirmation is a what existence procedure, yes, it's tax balance, but you can also use it to help you with completeness when it comes to related liability to a liability that could be if it's an event that you have a relationship with. Okay? Okay, good. Now, this is the example of the standard confirmation. This guy, it's kind of hard to see. This is account balance. This down here is where they ask about loans. And so you would ask about both of those on the standard confirmation. No hard to see. Okay, fraud risk related to the cash cycle. 2 that we're interested in. Lapping and kiting. Right here. Okay, now lapping is when somebody steals money and does not record the cash receipt. And then they use a subsequent receipt to conceal the first check. Who wants to be my cashier? Be my cashier? Okay. I want to speak to the evil cashier. I want to speak to the honest cashier. Here you are. I want to speak to the evil cashier. What's the evil cashier to do with that? They're stealing money. Now, the evil cashier is not totally bad. It's not totally evil, because usually they're thinking, I got a system, and I'm going to be able to pay it back. No problem. No one can do this, right? And what happens? in, I come in, and I pay out another person. The other person now leaves it out. Now another person. So the other person pays it. Now another person. Huh? See, that's where the lapper gets in trouble. They get, see how much I had to fight to get you to steal it? Now you're used to it, you want to steal it again. No, what you're going to do is you're going to take what? You're going to take that second deposit and use it to cover the one that you stole, right? So you're buying time here, you're lapping, you're saying, and what happens? They get out of whack. They steal too much too fast, and then there's not enough cash to cover the others, right? That's where the lapper really gets in trouble. Okay? So this is what we call lapping, and we say that what? Safeguards against lapping include what? Independent comparison, separation, receipts. Okay? One of the best methods to guard against lapping is what? The lockbox system. With the lockbox system, the cash goes what? Directly to the bank, doesn't it? Okay? Okay, good. Now, what the auditor is going to do is compare the what? Details of bank deposits with the remittance advice, etc. And let me just go ahead and put here, look for delays. Look for delays. Okay? What happened? Didn't I say that things are supposed to be deposited daily? But if my cashier stole the money on Tuesday and has to wait until Friday for enough to come in to cover that, there's going to be a delay between what? Between the day the money came in, and there should be what? There should be receipts that are given in the cash register or something that's doing what? That's why we have cash registers to keep track of what came in on any given day, etc. And so there should be what? A match between what came in that day for the cash registers, for the devices, and what? And the actual depositors, right? If there's a delay, I'm going to say as the auditor, excuse me, you got this money on Tuesday, how come you didn't deposit it until Friday? That's when everybody starts to ask. You made it to a so you're going to look to see what? If that deposit that came in that day also got that remittance that came in that day also got deposited that day, right? Okay? Okay, good. Now, that's lapping. The other one that we want to be considered of, aware of, is kiting. And kiting occurs when a check drawn on one bank is deposited in another bank and no record is made of the deposit coming out of the first bank until after the year end. So that the company can do what? The company counts the same cash amount in both accounts. They count it as a deposit in bank 2. They don't count it as a withdrawal in bank 1. So they're getting to do what? Count that in both accounts at the same time. That's kiting. Okay. Now, to detect kiting, we're going to use a bank transfer schedule. And the bank transfer schedule is prepared at year end. And to ensure that kiting has not occurred, we will look at all checks that were outstanding at year end and see that they are listed on the bank statement. Okay. Now, when you take a look, the disbursing account should not precede the date that the money is received in the receiving account. Can you receive money before you disperse it? Can you receive money before you disperse it? Can Bank 2 receive money before it's dispersed out of Bank 1? Can Bank 2, Kevin, not asking you. electronically.
Yeah.
Kind of quick. Wow.
There's like an allowance, so like the controller and gold, and that's more than allowed to do with have a certain research for that certain state, so it's like related to the how do you know?
What you're talking about there is when the bank is basically going to put a hold on a certain part of the check. What I'm talking about, money gets dispersed on 12/31. Money gets dispersed on 1/3/19. That's disbursement. Can that money be received? This is bank one. Can that money be received in bank two on 12/31/18? Huh? Not unless we have a time machine going on here. Unless we've invented a time machine. This cannot be. So what the auditor is going to do is prepare a bank transfer schedule. And on the bank transfer schedule, we're going to sit there and we're going to compare the day it was dispersed versus the day it was received. And if we see something like that, that's fraud, isn't it? That's hiding. Can't happen. Then you say, well, John, how do you know when it was dispersed? How do you know when it was received? I get the bank cutoff statement that comes 10 to 15 days after year end, don't I? And I'll be able to see all those transactions and how they occurred. And use that to compare bank transfer schedule, which is circulated with Bill on the board, and we're going to compare those, right? See what nothing to do with that. Okay? Okay, so which of the following characteristics might be indicative of hiding? High turnover of employees that have access to cash. Things with those employees do the background checking and high turnover. Many large checks that are recorded on Mondays. And maybe we're a Sunday brunch outfit that has all kinds of money on Sundays that has to be deposited on Monday. Right? Okay, low average balance compared to high level deposits. The balances are what? Pretty even in this kiting situation. This is $100. The average is 100, right? Meanwhile, we could have all kinds of transfers going on because they're trying to kite all the time, right? So yeah, that's probably the one. Frequent ATM checking account withdrawals. Why? The ATM itself has control of it, doesn't it? Okay. In the bank transfer schedule, here's the bank transfer schedule. Which one of these looks like fraud to you? Now, they don't say fraud, but mistake cash. When you're looking at this, you want to see per books, did they record the money in two accounts at once? At 12/31. X1. You see anywhere here where they would have had that money being recorded on their books at both 12/31 in both banks at 12/31 X1. Huh? A, what happened? They don't record the disbursement until the next year. Meanwhile, they recorded what? The receipt in year one, didn't they? All the rest of these, it all happened what? In the same year? So they didn't count it in both accounts, both bank accounts on year end. The first one, yeah, they were counting that 12/31 per books as the receipt date. Meanwhile, they didn't record as disbursement out of the first bank until what? Until the new year? Okay? All right, good. Index of bank transfer statement. On receiving a client's bank cutoff statement, an auditor most likely would trace what? Deposits in transit listed in the cutoff statement to the year-end bank reconciliation. Deposits in transit listed in the bank cutoff statement to the year-end reconciliation. Why would I do that? The deposit in transit listed in the bank cutoff statement to the year-end reconciliation is not going to give me much information. Checks dated after year-end listed in the cutoff statement to the year-end outstanding checklist. Well, if the check is dated after year-end, then it's not going to be an outstanding check, is it? Checks dated in January are not outstanding at 12/31. Okay. Deposits recorded in the cash receipts journal after year-end to the cutoff statement. Well, if they happen after year-end, then I'm not worried about them not being properly reported as checks, outstanding checks. Prior year checks listed in the cutoff statement to the year-end outstanding check. Yeah, it's the checks what? That were written at the end of the current year that didn't clear the bank until the next year and show up on that bank cutoff statement. That's what I'm looking for, right? Okay. The problem with number one, letter A, is bank cutoff statements don't list deposits in transit. Bank cutoff statement doesn't say this was a deposit in transit. They just know they got a deposit on a certain day, didn't they? Okay. Proof of cash. Proof of cash is something you would probably do if you had an entity that you would probably do either a first-year audit, or they were a very small entity in which you weren't satisfied with the separation of duties, etc. And so what a bank cutoff, what a proof of cash does is it's a 4-column bank reconciliation. So notice we have the June 30th bank reconciliation, we have the July 31st bank reconciliation, but then we make adjustments to, and sometimes on the bank statement you'll see debits and credits. They'll list it that way as well, okay? But deposits and payments that were made. So notice, for example, that the deposit in transit, which is added to my bank statement to get to my balance per book, then has to be what? Subtracted as a deposit from my bank statement to get to my what? Get to my general ledger accounts, because that amount would have been included in the deposits for July for my bank. Meanwhile, it was a deposit that was in transit. It was a June deposit for my books, right? And so you would go through and make all of these adjustments accordingly, so that not only are you proving the year-end balances, you're also proving the debits and credits, right? That are showing up in the books and showing up in the bank statement. Okay? 4-column bank reconciliation. Okay? Other types of things, internal controls, all listed around completeness, guys. Okay, so with all that, let's go ahead and see if we can find Let's do the homework first. Okay, so let's take a look at this one. When auditing with fraud awareness, auditors should especially notice follow up on employees' activities under which of the conditions. Petty cash box is always locked. No. The company always estimates inventory but never takes the complete physical count. Yeah, we should have 32 laptops out there, but I'm never going to come to you and say, where's laptop 47362? That's a problem, isn't it? Okay. That way. Which of the following is least indicative of fraudulent activity? Internal auditors cannot locate several credit memos. What's a credit memo? Yeah, they call it a credit memo because they're in a credit account receivable, right? Credit account receivable and debit what? Debit to sales, whatever, debit sales returns, whatever, right? Okay, good. Well, if you can't find a credit memo, that means somebody's doing what? Going and issuing credits to a customer's account. Customer is paying, that cash is being pocketed, isn't it? That's a problem. Right? Because the client, the customer can say, okay, I made my payment. We gave you credit because you credited my account for that. My balance is down. The customer's not going to get money. Meanwhile, the cash is being sent in and going in someone's pocket, right? So if you can't find those credit numbers, need to be tightly controlled, don't they? Okay, bank reconciliation has no outstanding checks or deposits older than 15 days. Yeah, okay. That sounds okay. I don't have these checks that are outstanding at the end of the year, etc. I don't have to worry about it, right? Weird transfers that are doing weird things like this up on the board, right? Numerous cash refunds have been made to different people at the same post office box address. Yeah, I mean, I don't know too many people that say, hey, want to share a post office box? Usually that's kind of a private thing, one at a time. Okay? 3 people were absent the day the auditors handed out the paychecks, and nobody's come to pick them up. Well, that's a problem. Okay. Number 3, which of these arrangements of duties would likely lead to embezzlement? Financial vice president received checks made out to suppliers and supporting invoices, signed the checks. Well, they get the invoice. Somebody high level is releasing the checks, right? Separation of what? Record keeping and authorization to pay. The accounts receivable clerk received a list of payments received by the cashier so he could make entries into the customer's account receivable subsidiary. Okay. The inventory warehouse manager has responsibility for making the physical inventory observation and recording discrepancies. We've combined custody and record keeping, haven't we? Number 4, which of the following would an auditor consider to be an incompatible operation if the cashier receives remittances? The cashier does what? Also post it to the records. We separated that up here, didn't we? Somebody else was making the entry to the records. Which of the following is an effective audit procedure that an auditor might use to detect kiting between intercompany accounts? Prepare a bank transfer schedule. Upon receipt of customers' checks in the mailroom, a responsible employee should prepare a remittance list that is forwarded to the cashier. A copy of the list should also be sent to the accounts receivable bookkeeper, subsidiary ledger. There it is. Okay, again, that's why I did that sort of abbreviated one, because you can kind of see the questions kind of get more towards, they're not asking how many remittance invoices, where is it filed, which is all the stuff that you see on that other flow chart. So that other flow chart's okay, but this one on the board to me gets to more of the key elements. Number 7, which of the following control activities would best protect against the preparation of improper or inaccurate cash disbursements? All signed checks must be reviewed and compared with supporting document before we mail it, before it's released in the system if we're not mailing the checks. During an audit of cash, the auditor is most concerned with, okay, well, if you're not going to put completeness on this question, then I'll go with existence. Which of the following control activities would prevent a paid disbursement voucher from being presented for payment a second time? The official signing the check should stamp it paid. So if that invoice comes back again, it's not paid again, right? Fraud risk factors: incentive and pressure, opportunity, rationalization. All 3 of these. Okay. Okay, good. Let's see if we can knock the quiz out, and then we'll get out of here. So what do I want to do? I guess I want to hit the back button. No. Leave it to me to do the wrong thing. Let me hit home. Who started it? Okay. All right, let's take a look. Which of the following management policies would increase the probability of fraud in a company? Now, guys, we gave you the broad category of what? Incentive and pressure, opportunity, rationalization. But you got to kind of dig a little deeper than that to understand, well, what do we mean by incentive? An incentive would be what? Measuring performance and awarding bonuses based on performance. That's going to be an incentive, could even be a pressure, right? Which of the following is ordinarily considered an extended procedure during the independent audit of financial statements, measuring the timeline between the date of recording cash receipts and in the books and the date the deposit is made? Again, we're saying extending the procedure when you suspect fraud, right? For example, this will help you with lapping. That's why we're calling it an extended procedure, because you're doing these additional tests here when you start getting worried about fraud cash scheme, right? A cash fraud scheme like lapping. Really? Okay, it's still there. Which of the following would be consistent with an employee taking cash receipts from customer accounts? The total account receivable ledger balance is less than the control account, because what's happening? That remittance advice is going over, right? And it's being entered into the accounts receivable. But didn't we take the deposit tickets and also what? Show the deposit tickets to the subsidiary ledger people? So not only did they get the remittance advice, they also got the deposit ticket, a copy of that, so they can compare the details of what's going in. And then when we go to reconcile the GL and the accounts receivable, it'll be like, well, why doesn't this reconcile? because some of the deposits that came in on the remittance advice never got deposited, right? So those should match if we're following these procedures up here. An audit plan of substantive procedures for cash would not include request a bank cutoff statement be mailed to the client. The bank cutoff statement goes directly to what? To the auditor, doesn't it? Number 5, in an audit of cash, the auditor obtains a bank cutoff statement primarily to do what? Test items appearing on the client's year-end bank reconciliation. The what? Outstanding checks, the deposits in transit actually made it. The outstanding checks actually were outstanding and finally cleared the bank. Auditors ordinarily send a standard confirmation request to all banks with which the client has done business during the year under audit, regardless of year-end balances. So even if the balance is 0, still send that confirmation out, not to necessarily confirm the 0, but to do what? To see if there were any outstanding loans, right? Because maybe they withdrew all the money from that account just so that you won't confirm with that bank, so you won't find out about that loan, right? They're trying to conceal from you, so you send it regardless of what the balance is. If they've done business with that bank, still send the confirmation. An entity with a large volume of customer remittances by mail could most likely reduce the risk of employee misappropriation by using the lockbox, right? Money will go straight to the bank. An unrecorded check issued during the last week of the year would most likely be discovered by the auditor when we do what? We get the bank cutoff statement, we see that that check cleared the bank, yet it's not listed as an outstanding check, right? Number 9, as payments are received, one mailroom employee is assigned to pre-listing the receipts and preparing the deposit slip. Prior to forwarding the receipts, deposit slip and remittance advice to the accounts receivable for posting. Accounts receivable personnel re-put the deposit slip, stamp a respective endorse on the back of each check, and then forward the receipts and deposit slip to the Treasury Department. Evaluate the internal control. While like the one mailroom employee is assigned the responsibility for pre-listing the checks, preparing the deposit slip, prior to forwarding the receipts, the deposit slip, and the remittance advice to the accounts receivable for posting, we just combined what? Custody of the cash and the record keeping for the cash, didn't we? I forward the receipt, which is the actual check, the deposit slip, and the remittance advice to accounts receivable. I don't send a check. The checks are going to go over by the cashier or the mailroom employee to the bank, aren't they? They don't go to the accounts receivable department. The actual remittance goes directly to the bank, doesn't it? From whoever opened the check and listed it. So this is inadequate control due to lack of separation of duties. Which of the following should be performed by persons opening the mail? Restrictive endorsement, right? Did you take a picture of this? This answered like what, maybe 5-6 questions about the cash audit? Internal controls over cash? I'm going to stand next to it. Any masterpiece. Okay, guys? Question? All right, good. I don't know that we got the whole recording. See, I can say here. We missed the first half. We lost it, but I'll see what I can save here. I will post it up, and then I'll see you all on Tuesday. Okay. Hopefully, I'll have some more information about the extra credit coming up here. I got to reach out again. Okay, we'll see you. Yeah, bye, Steve.